This is Chris Casey, Managing Director with Windrock Wealth Management. I'm joined today by Doug Casey. And before I receive a dozen emails, I should mention that we're not related. Doug is the chairman of Casey Research, which publishes a number of investment newsletters, and he is a noted speculator, economist, and author. Mr. Casey wrote several books, including Crisis Investing, Strategic Investing, The International Man, Totally Incorrect, Right on the Money, and the first two novels under the series entitled High Ground. The latest is entitled Drug Lord, and I highly recommend it. He's been featured guest on hundreds of radio and television shows, including such iconic shows as David Letterman, Phil Donahue, etc., and I especially recommend the Phil Donahue episode for anyone that wants to YouTube it to see a typical audience reaction to Doug's views. Doug, thank you for joining us.
Well, Chris, it's a pleasure to be on with you, and we may well be related. If we go back 150 years or more, is your branch of the Casey family come from County Cork?
It does not. In fact, my branch comes from Warsaw. My great-grandfather came here and changed his name from Casimir Jablonski to Charles Casey. So I'm quite certain we're not related.
My mother's part of the family came from Lithuania and a bunch of other countries around the Baltic Sea. So that might include Poland. So we might actually be closer than you thought, but nothing.
But let's start off with a fairly recent and unique development in Europe, and that is the secession movement in Catalonia. And I've been fascinated by this controversy because, well, for several reasons, but on the one hand, as far as I could see, both sides have kind of mismanaged this as much as they could. How do you see this playing out, and what's kind of the future of various secession movements in general in Europe?
I think that there are going to be many more of them as time goes on in the future, because the European Union started to come into existence back in the 60s, basically as an iron and steel free trade union. And it's grown like Topsy since then. It's become a political union. And at this point in Brussels, most people are unaware of this, but there are 50,000 Eurocrats that live in and around Brussels doing the kind of nefarious things that government bureaucrats do, which is pass regulations and so forth. And I think the average European likes the ability to travel without visas between countries, and but he doesn't like the regulation where they're trying to say what the French have to put in their cheeses and all kinds of ridiculous things. So actually, what's going to happen is instead of the European Union getting stronger, it's actually going to fly apart. And Scotland is on the razor's edge of splitting off from the UK, which itself is split off from Brussels. And in Spain, it's not just Catalonia, but to the north of the Catalan region, which is where Barcelona is, the Basque region. And for many years, there's been an independence movement among the Basques. This is true all over Europe. So this is centrifugal force that's going to tear Europe apart, and it's a good thing as far as I'm concerned.
And I'm not sure if it's ironic or not, but the president of Catalonia actually fled when he fled to Brussels. That's actually the ground zero of maybe the largest secessionist movement that's waiting to happen as far as Flanders and Wallonia splitting apart.
You're absolutely right. If I was going to pick the next country to fly apart, it would be the situs of the European Union itself, Brussels, into the French-speaking and the Dutch-speaking sections. They're culturally quite different. And Belgium is an artificial country that was formed after the Napoleonic Wars. So, yeah, quite correct. There are several areas in France. People don't realize that Germany was scores of little duchies and baronies and principalities before Bismarck put it together before the Franco-Prussian War. And they forget that the same was true of Italy before Garibaldi in the 1860s. So none of these things are permanent places in the cosmic firmament. And if we get away from Europe, I mean, Africa, there's not one country there, well, possible exception of parts of Ethiopia, that are actually real countries per se. They're all artificial constructs that were put together on the boardrooms of Europe. Same is true of the Middle East. None of those are real countries. Same is true of Central Asia. So the world really should reorient itself. If you're going to have nation states at all, which I think is a very bad idea, quite frankly, there should be many, many more of them, and they should be structured according to cultural.
You could probably add India and China actually to that list as well.
I would definitely.
Thinking about Europe then, with these very real secessionist movements that are possible and active throughout Europe, you combine that with their debt levels, and it's kind of you have a weird phenomenon in that the euro is probably around about a two-year high against the U.S. dollar, and you have European bonds with the yields that they have. And I think let me just read off some yields from, I think yesterday here I pulled these, but I mean the U.S. 10-year Treasury is at 2.3%. Meanwhile, you have the Italian 10-year at 1.8%, the Spanish at 1.5%, and perhaps most telling, you have the Greek 10-year at 5.2%. And what's really shocking is if you look at the Bank of America Merrill Lynch Euro High Yield Index, it's at 2.4%, which is on par with the 10-year Treasury. And we're talking about junk bonds. What do you think are the investment implications of this? What's it mean for the euro? What's it mean for various European bonds?
Well, to start with, the euro is an Esperanto currency. It's artificially constructed. It's not even backed by the taxing power of the EU, which doesn't really have any taxing power. So it's not as good even as national currencies from that point of view. No, the euro is going to fly apart and cease to exist. It's simply not going to work. So as far as the bond market's concerned, it's not just in a bubble, it's in a hyper bubble. People forget that not so very long ago, in the late 70s and the early 80s especially, the U.S. government was paying 15% on its bonds, or more on T-bills, so that all over the world, interest rates are at unreasonably low levels. And they're going to revert to the mean, and eventually they're going to head back up towards the levels that we saw in the early 80s and beyond. So I wouldn't touch bonds with a 10-foot pole right now.
It's interesting, assuming that we have down the road here a kind of a sovereign bond crisis in Europe, and along with, I assume at the same time we're going to have some type of European banking crisis in general. What do you think the impact of that is on the U.S. economy and the U.S. financial markets?
Well, look, the stock market is very high by all historic parameters: price to book value, price earnings ratios, lowest dividend yields in history. And it's all been caused by not just the U.S. central bank, the Federal Reserve, printing up money by the scores of trillions of currency units, but all the central banks of the world, the Chinese, the Japanese, the Europeans, and all that money, all that currency, I should say, has flowed into assets, into the financial markets, and into the real estate market. So it's created lots of bubbles. And perhaps the current bubble in Bitcoins, which I think is going to get bigger, but we'll see, is also a result of all this money printing. So, frankly, I really don't want any part of it because eventually it's going to blow up and it's going to be very ugly.
What do you think are some other risks to the U.S. economy? I mean, I'd imagine one would be assuming that deficits even increase from here, but regardless, the Chinese and Japanese are probably just not interested in buying more U.S. bonds, and then you'd see interest rates spike quite a bit. Do you see that as a risk, or is there anything else that comes to mind that you're terribly concerned about as far as a catalyst to really bring down the U.S. financial markets?
I think the big risk is that the Chinese and the Japanese, and for that matter, the Saudis, and all the other big holders, are going to sell their bonds because they recognize, or they should, that the U.S. government bonds are the unsecured liability of a bankrupt government. They're a triple threat to capital. You've got the interest rate risk, which is extraordinarily high. You've got the inflation risk, because eventually inflation is going to get out of control, and I think eventually is very soon now. And you've got the default risk. The U.S. government isn't going to be able to pay off these bonds. Well, the default risk is not great in the case of the U.S. as it was with Argentina. Because people accept the dollar around the world at the moment, although that's going to come to an end too. People are going to be trying to get out of bonds. In fact, the Chinese are buying real assets all over the world at this point. They don't want to own bonds, certainly not when their return is, in real terms, is considerably less than actual inflation. Forget about the other risks.
You know, we have a kind of internal debate at Windrock where we discuss whether or not the Federal Reserve has a real plan and just things are out of their control, or whether or not they're sincerely just completely incompetent and obviously operating from a completely wrong model. But regardless, do you find their plans right now to sell their bond hoard is legitimate? I mean, I just can't fathom that they think that they can really pull this off when they're dumping. The way I calculate it, you're increasing the bond float, so to speak, by maybe as much as a third to 50%. I mean, interest rates have to spike from that point in time.
Well, I don't see how they can get rid of their bond hoard when the U.S. government is running a $650 billion deficit now, and it's got to sell all that paper basically to the Federal Reserve. So they can't sell bonds when they've got to basically finance the U.S. deficit by buying more bonds, and that deficit is going to go up as the economy slows down and goes into a really nasty recession, as we go into the trailing edge of the financial hurricane that we entered in 2007. And as we come out of the eye of the storm we're in now, it's going to last much longer and be much more serious and much different than what we remember back in 2008 and 9. So as interest rates go up, the U.S. government is going to be spending from, let's say, 2% to finance the debt now. It's going to double when interest rates go to 4% and triple when they go to 6%. So no, I say it is impossible that the Federal Reserve can unwind this now. To the contrary, they're going to have to buy more.
I agree, and I guess the only thing they could be hanging their hat on would be is if foreign buyers really stepped up and helped sop up this glut of bonds that's going to hit the market, according to their plans at least. And you already mentioned how this, just from a investment perspective, from the Chinese or Japanese would view this as a poor idea. What about the perspective of them becoming massive sellers at the same time because of some type of trade war that could be initiated by this current administration? I'm actually surprised that things haven't deteriorated yet, and I think mainly it's because of trying to co-opt China's participation as far as reining in what they view as a threat by North Korea.
Yes, that's right. But if the Chinese wanted to punish the U.S., they can start unloading those bonds, causing interest rates to rise, and that would be very ugly for the U.S. government to have to pay much more in terms of interest to finance its $20+ billion of debt. So that's a possibility. Anything could happen today. It's in an increasingly unstable world that we live in. So I don't see much cause for optimism with the markets as high as they are. If the markets were as cheap as they once were, high interest rates, low stock market yielding 6, 7, 8% in dividends, well, sure, I'd be perfectly willing to take the risk. But, I try to look at the bright side of these things. And the bright side of this is that as the government creates more and more money, currency, I should say, which they're going to have to do, what's going to happen is they're going to create more and more bubbles. And for the economy as a whole, bubbles are a very bad thing. But I'm looking at this from the point of view as a speculator. And there are going to be more bubbles created. After the bond market bubble, the stock market bubble, the real estate bubble, now the Bitcoin bubble, there are going to be others. What's next? Actually, it's going to be my old specialty, I think, which is to say commodities, gold, silver, other commodities, many other commodities, and small mining stocks, which are one of the few areas now that are actually cheap.
So outside of
nothing's cheap, they are.
So outside of precious metals, let's say, and maybe outside of uranium, any other commodities strike you as excellent buys right now? Is any kind of agricultural commodities or base metal commodities? Anything else stand out to you?
Absolutely. All of the agricultural commodities are actually quite cheap right now. All the grains, farmers aren't making any money. Cattle, nobody's making any money on cattle. I like cattle too. Sugar is down significantly from its previous high. You got to remember that most of the commodities hit a peak in around 2010, 2011, and they're down about 50% from then. And that's in terms of dollars. And since then, in the last 6, 7 years, the dollar's lost value too. So commodities are actually quite cheap right now.
I know Casey Research, you guys just put out a very nice piece on copper as well as it relates to a play on the future of the electric vehicle market. So I assume that's an area that you like quite a bit.
Yeah, and more than copper, of course, things like cobalt and nickel, which are actually a better way to play the electric vehicle trend, which I think is real, quite frankly. A better way to play it than lithium, because there's actually quite a bit of lithium in the world that can be profitably mined at current prices. But yeah, I'm not crazy enthusiastic about copper from some points of view, because there's an old stock market saying. It's that the roof of every bull market is covered in copper. It's an industrial metal. When the economy is booming, copper goes up. But the economy is not booming now, and I think copper is going to go up because of its applications with electric vehicles. And electric vehicles are going to work. I'm not saying Tesla is going to work. I think Tesla may be a terminal short sale. I certainly wouldn't want to own it at this level. But electric vehicles are going to work.
Doug, are there any other technological innovations that you're following and you think make sense from an investment thesis outside of electric vehicles? Is it, just anything out there outside, maybe it's blockchain or what have you?
What is the technology that I want to get involved in right now? I'm an amateur science nerd. I've always read lots of science ever since I was a kid. Very interested in it. But is there anything I can put my finger on right now? Actually, no, because what I'm trying to do, Chris, is, or have always done, not always successfully, is act like a crocodile or a leopard. In other words, I don't want to chase after everything that comes by in front of me. I like to wait until something really fat comes by and then jump on it, pounce on it. I think that's another way of saying what Buffett once said. It's you got to treat investing like a baseball game with no called strikes. So what am I doing right now? Actually, the only thing that I'm actually doing, other than stuff in the commodity market, where I'm selling puts against cheap commodities, is that I'm taking private placements in these small mining stocks, and I think that's the next bubble that's going to emerge.
Where can people find Drug Lord and your other publications and check out your investment newsletters?
Well, we have a lot of free publications at kcresearch.com, or you can also go to internationalman.com, which is an excellent internationally oriented newsletter, which is free. So those two places, we've got some great free publications, and go to highgroundbooks.com for Drug Lord and Speculator. But then again, Amazon has them, and they both have hundreds of 5-star ratings at this point. They're actually excellent books. People should read them now because you don't want to fall behind, because we're working on Benton, which is the third book in the 7-book series, where our hero, Charles Knight, decides to take things into his own hands and becomes an assassin. And there we are going to treat the techniques and the history and the morality of political assassinations. So, but that's for next year.
We'll look forward to that one too. Well, Doug, this has been great.